Something feels different this time. Not loud, not dramatic, but quietly unsettling. Gas prices move without warning. Grocery bills feel heavier. Layoffs appear in headlines almost every week. And yet markets still look strangely calm on the surface. It feels like standing on solid ground while sensing movement underneath, like an earthquake that hasn't fully revealed itself yet. And that's exactly why this moment matters. Because the most dangerous economic shifts don't arrive with sirens. They arrive slowly, disguised as temporary, transitory, or nothing to worry about. Before we go any further, if you value clear, calm explanations about money, markets, and the global economy, make sure you like this video and subscribe to Finance and Global Economy. It helps the channel grow and ensures you don't miss what's coming next, especially in times like these. Right now, the global economy is sending mixed signals that confuse even experienced investors. On one hand, unemployment numbers in some countries still look stable. On the other, corporate debt is rising, government budgets are stretched thin, and consumer confidence is quietly eroding. This is how uncertainty begins. Not with a crash, but with contradictions. The last few years rewired how the world works. Supply chains broke, central banks printed trillions. Interest rates jumped faster than most people expected, and global trust fractured. What we're living through now is not a single crisis. It's a transition period, where old systems struggle to survive and new ones haven't fully formed yet. Recessions used to follow a familiar pattern. Something overheated, something broke, and policymakers stepped in with tools that worked before. But today's environment is different. Inflation isn't just about demand anymore. It's about geopolitics, demographics, energy, and debt. Central banks are trapped between fighting inflation and avoiding economic collapse. Raise rates too much, and borrowing freezes. Cut rates too soon, and inflation flares back up. This balancing act is fragile, and history shows us that fragile systems rarely stay stable for long. What makes this moment especially dangerous is how global everything has become. A slowdown in one major economy doesn't stay local anymore. It ripples outward through trade, currencies, commodities, and financial markets. When Europe struggles with energy costs, it affects manufacturing worldwide. When China slows down, global demand weakens. When the U.S. tightens financial conditions, capital flows shift everywhere. These connections mean that instability travels faster than ever before. Often before everyday people realize what's happening. Debt is another quiet force reshaping the future. Governments borrowed heavily to survive recent crises, and corporations followed suit. Even households leaned more on credit just to maintain basic lifestyles. Debt itself isn't the villain, but when growth slows and interest rates stay high, debt becomes heavier, harder to manage, and more dangerous. Servicing that debt starts consuming resources that could have gone toward innovation, wages, or stability. This is how economies lose momentum without an obvious breaking point. And while financial markets often act confident, confidence doesn't equal strength. Markets can remain optimistic far longer than reality supports, especially when fueled by hope that central banks will always step in to save the day. But history reminds us that policy tools lose effectiveness over time. Each crisis requires stronger medicine, and stronger medicine comes with harsher side effects. Eventually, the cure stops working the way it used to. For everyday people, this uncertainty shows up in subtle ways. Savings don't stretch as far. Long-term plans feel harder to commit to. Younger generations delay major life decisions not because they want to, but because the economic ground feels unstable. Older generations worry about retirement security in ways they didn't expect to. These emotional shifts matter because economies are not just numbers. They are built on confidence, trust, and expectations. When those weaken, growth weakens too. This doesn't mean collapse is guaranteed, but it does mean the margin for error is shrinking. The global system is more leveraged, more divided, and more sensitive than it was in previous decades. Political tensions complicate economic cooperation. Trade relationships are being rewritten. Energy security is now a strategic issue, not just a market one. These forces don't resolve quickly. They shape years, sometimes decades. What's different this time is the pace. Information moves instantly. Reactions are faster. Panic can spread before facts are fully understood. That makes calm analysis more valuable than ever. Understanding macro trends isn't about predicting the exact date of a recession. It's about recognizing the direction of pressure and preparing mentally and financially for change. The people who navigate uncertainty best are not the ones chasing headlines. They're the ones who stay informed, flexible, and realistic. This is why conversations like this matter and why channels like Finance and Global Economy exist. Not to scare, but to clarify. Not to promise certainty, but to explain risk. Economic cycles have always existed, but global instability adds new layers that require deeper awareness. When growth slows globally, competition for resources increases. When confidence fades, volatility rises. These are patterns, not predictions. As we move forward, pay attention not just to what policymakers say, but to what they do. Watch credit conditions, employment trends, and consumer behavior. Notice how often the word uncertainty appears in corporate earnings calls. These signals often appear long before official recession announcements. By the time headlines confirm a downturn, the effects are already being felt. None of this means you should panic or disengage. It means staying curious, staying informed, and understanding that economic calm is not the same as economic health. The most resilient individuals and societies are the ones that acknowledge reality early and adapt thoughtfully. If this perspective helped you see the bigger picture, take a moment to like this video and subscribe to Finance and Global Economy if you haven't already. And before you go, I'd really like to hear from you. Do you feel the economy is stronger than it looks, or are deeper problems being ignored? Share your thoughts in the comments. And if you know someone who's been confused or concerned about where the global economy is headed, share this video with them. These conversations matter more than ever, and your voice is part of them.